مرحبا بالجميع في اليوم الثالث من منتدى مستقبل العقار. اليوم بيكون فريق من ديلويت قسم العقارات راح يقدم 3 أجزاء من العرض هذا. أولاً راح بيصير عرض عن توقعات السوق خلال العام القادم، وبعدها بيصير فيه بانل ديسكشن على العد التنازلي ل 2030، وبعدين عن الرياض المتطورة. العرض راح يكون باللغة الإنجليزية، فيه أجهزة الترجمة الفورية في الأخير إذا حد يبغى يستخدمها. الآن أترك العرض مع أوليفر مورغان، رئيس الاستشارات العقارية بديلويت الشرق الأوسط.
Thank you for the warm welcome. Salam alaikum. Oliver Morgan, real estate leader for the Middle East. It's an absolute pleasure to be back for the 5th edition of the Real Estate Future Forum, and I hope everybody agrees this has been the biggest and the best so far. And I think some really, really high-profile panelists and then also announcements as well. So very grateful to be here, and thank you to all the organisers. Firstly, I'd like to start and just actually make an announcement that the Middle East within Deloitte has been selected as a global centre of excellence. And I'm not going to say too much more because what we've done is we've invested very heavily in technology and understanding how cities work, and we're going to showcase a bit of that information today. So firstly, I'm going to lead you through what are our annual real estate predictions, and what we do is we do an initial look back at 2025. I've got a fantastic panel hosted by Manik Adama, one of our advisory partners, who are going to debate the countdown to 2030. We really are on that critical timeline now in terms of delivery. And we've got a fantastic panel to discuss that. And then I think we've got an exceptional highlight, Dr. Marco, who's our global digital real estate leader. We've taken a couple of years' worth of big data, looking at how people move around Riyadh. And there was an amazing story in terms of the evolution of the city with the impact of the metro and how mobility patterns and how people are moving towards a 15-minute city. So that's quite a packed agenda for our 45-minute slot. So there'll be a lot to take on board. And then at the end, there'll be a QR code where I want all of you to contribute, please. Our view on the market is, we have our view. We look at the underlying market data. We look at the statistics. We speak to a lot of investors. We speak to a lot of government stakeholders. But at the end of the day, the market is driven by you, the end users, as well. So we've got a survey. That survey will actually be featured in the publication that comes out in February. And it'd be amazing to have all of your views. If you also leave your email address, you'll also receive a copy of the publication as well. So without further ado, just to touch on 2025. So I think we've got a tale of, 2 halves in 2025. We started the year and we actually saw about 1,200 keys being delivered into the hospitality market. So actually we saw a slight dip in terms of the hotel occupancies as the keys were absorbed into the marketplace. Now, over the course of the year, we did see that recover. And overall, I'm taking the Saudi-wide stats here. If you look at the revenue per available room in the kingdom, that actually was up around 4%, so quite a stable rate. If we look at residential and office, a lot of headlines in those sectors. So you actually had records being set in King Abdullah Financial District with rentals reaching above 3,000 dirhams a square metre, 3,000 riyals a square metre, apologies. And if you look at residential as well, up at Diriyah, we had the sale of around about 107 units, the Ritz-Carlton residences, hitting over 40,000 riyals a square metre. So exceptional peaks that have been reached in the market in Riyadh specifically. But in terms of the overall picture, in terms of the residential transaction volumes, when we did this discussion a year ago, we were just coming off the back of a large amount of transactions that were taking place. The market had a huge leap. Some measures were taken just to cool the market slightly. So we've seen a bit more stable growth, but residential reaching around about 9% on an annual basis in terms of increases. And then last but not least, in terms of the retail sector, we saw relatively flat growth. But again, we'll dig into it in a bit when we look at some of the metro data. A lot of opportunities where actually you have the transport links, and that relates to a mall or F&B or other ancillary retail around in communities. And that's starting to have a big impact and effect on the city. As I mentioned before, we're moving towards that 15-minute city journey. So last but not least, I'll just touch on the outlook for 2026. So It's a bit of a privilege to be working in a market where actually the market is opening up to international investment. So I think there is a large amount of supply that we are tracking in terms of residential, for example, that is coming to market. But actually now the demand pool has been opened up with the non-Saudi investment laws. We're anticipating the publication of the maps, but the panel on the first day at the Real Estate Future Forum, very much touched on the need for the larger projects to embrace some of this large-scale investment. So it'd be hotly awaited in terms of the publication of the maps. But for our outlook, we are predicting again around about between 5 and 10% growth still in the residential sales prices in Riyadh. Happy to discuss, and we have our booth in the main showroom to speak to anybody individually one-on-one to run through our predictions. But I will hand over to Manika, who will walk us through the countdown to 2030. Thank you.
Thank you, Oliver, and good morning, everyone. I am Manika Dhama, Real Estate Advisory Partner at Deloitte Middle East. I'm delighted to be joined by our esteemed panelists, who are all global leaders in the real estate and infrastructure space. Michael, obviously, who leads our infrastructure and real estate globally. Marco, who's our digital real estate leader, and obviously is going to walk you through a very interesting showcase after the panel. And Emiliano, who joins us, who's based out of Italy, is the global legal leader for the real estate segment. As we count down to 2030, which is obviously a milestone year in Saudi Arabia in terms of the vision, I really wanted to take time today to discuss with all of them, obviously, what we've seen in the investments, regulatory and technology space in the last 12 months, and then obviously look at what trends do we see coming down the road over the next 5 years. So if I can start with you, Michael. In the investment space, and we heard some interesting bits from obviously the BlackRock team yesterday as well on the podium. What do you see in terms of the segments that have been invested in, or the kind of capital that's come in over the last 12 months?
Sure. I think a lot of it's been driven by what's happening globally. I mean, we are living in interesting times. There is volatility in the world. And capital, like everything else, is trying to figure out where it should go. But it is driving a number of things, because people are beginning to think about the sovereign. They're thinking about resilience and security, and that sort of, again, drives where capital goes. So if you're looking at where there's a shift towards building the infrastructure to make sure that it can support the sovereign, that things that might have been left before or there was a reliance on other countries now are being invested in, and the capital is following that. So, getting the logistics and supply chain is a key piece in terms of, you can see there's lots of investment, but investing there to get that up to speed. Security and resilience in terms of making assets more resilient for not only climate issues but it's around security and cyber and all of the things that can happen. So there's lots of investment happening there. I think and then you go to things like, because there's more digital being used, things like data centers. And for a long while, we all said we could centralize that and we can put it into the cloud and we can do all of that, and it doesn't matter about borders. Except now it matters about borders, and countries are making decisions and locating, and then that drives the demand, because suddenly you have more digital happening in a given location, so you need your own data center, which drives more investment. Yeah. Follow on from that, what we're also seeing is there is a shortage of housing, particularly on social and affordable, nearly everywhere, and so that's following. And the other bit in terms of just future where success is and investments happening is that efficiency. So bringing digital into real estate to cleaner energy, more sustainable. Mm-hmm. Not always because of the climate bit. That's not the decision. It's actually a cost and efficiency basis in terms of making your real estate more cost effective and more valuable. And so there's a lot of investment happening in that, and all the things that are around it in terms of the energy sources and things that drive that in. So it is very clear that the winners going forward from a city point of view are going to be those that have that efficient, strong, resilient infrastructure in the location that acts as the bedrock for all of the real estate that we built.
Yeah, and I think, I mean, obviously we discussed the whole life cycle costing bit quite a lot. I think a lot of focus ends up being on, upfront capex and how much it's going to cost to actually build, but then you do have to think about how that runs over time. If I can bring you in, Emiliano, on obviously we spoke about housing, and we know the foreign ownership law has obviously been initiated in Saudi Arabia this year. How do you think that's going to shift, particularly on the residential demand side of things? Obviously broader base of buyers, but maybe also institutional investment. I know we've spoken a lot about the hospitality, interest from, say, Europe and others. How do you see that playing out?
Thank you, Manika. We see a huge interest from international real estate platform of asset manager to invest here. The criteria is to have a co-equity investment with European financial equity coming to Saudi with a co-management in the selection of investment. The preferred asset class we see is the hospitality. The structure of a transaction is to have a national developer building the structural international hotel brand and managing the hotel. The specific core of type of asset is the development asset, which is going to, in the expectation of international investor, gives a higher yield with respect to the yield which an international asset manager can have today in Europe. What we usually suggest is to select an hotel operator which has an integrated approach like in Europe, where there is an hotel operator managing the hotel, having also a tour operator. In some cases, we have seen that in Europe there are many hotel operators interested to come here, having interested to buy also airplane companies to have a fully integrated approach in the offering to the market. And we hopefully hope to see also an international Saudi hotel operator here in Saudi expanding also in Europe. So the purpose is to have always bilateral investment in the hospitality sector, which we see is the emerging asset class between Europe and Saudi.
Yeah, and I think if, Marco, we tie in this readiness and that, fast forward to 2030, what do you expect is that non-negotiable digital readiness that, real estate developers or asset managers need to be able to prepare for what's coming?
It's an important question. We definitely like to focus our attention on the asset and building what's right for the right time in the right place. But there's a real growing sensibility around recognizing our assets as living systems. They have to persist over time. They have to be resilient to change. And that can only come with a solid foundation in data, understanding where it's coming from, being able to measure the right KPIs over time, and equate the future risk against current baselines. So getting that data foundation is more important now than ever. And the fact now that we've got incredible AI tools that allow us to do analytics like never before means that foundation is unpacking and unloading an opportunity to forecast and simulate scenarios that were previously very difficult, if not impossible. In that way, we can ensure that the money that we're putting into the ground today has the best opportunity to achieve its returns in the long term, and ensure that our assets are resilient against those factors that are impossible to control or predict, including the life cycle cost, which so many, unfortunately, might underestimate. And bringing in all those complexities through an opportunity to structure what was previously unstructured data and to clean what was previously very difficult data to manage, now puts us in a real driver's seat to be able to think long-term strategically. And the decisions around making that long-term operational readiness successful happen on day one when you start thinking about conceiving of a project at strategy level, getting your data principles right at the source.
Yeah, and I think if we link up, Michael, that whole investment side of things, so obviously for the readiness to be there in terms of digital, someone's got to put in the capital. Who do you think, what are the category of investors that would be comfortable, looking at the AI space, but with the real estate context in mind, and who might those be? How might they partner with local players?
Yeah, look, I think as Mark was saying, AI has to be embedded in terms of the whole process, right? So when we're talking about it, from the day you think about building something, you've got to start bringing digital and utilizing AI as part of that tool to help you shape but thinking about how the asset is going to be there for the long term. It's not about just building it, because that's easy, or, in terms of it's the operations that it's efficient, and as Marco said, it's achieving the business objectives from a profitability point of view, but it's also those efficiencies from a resource, cost, emissions, and everything else that comes with that. So the investors are going to track that, and they're going to insist that not only that AI is embedded in terms of how you operate the asset, but that you've been thinking about this from the very start and building. So I think there's going to be an expectation. It's not going to be digital twins that just are beautiful pictures anymore. It's going to be functional digital twin that starts at the very start and travels with the asset and becomes the control room for the asset, whatever that is, going forward. I think the other bit is the expectation is that there's going to be a connectivity between assets going forward, is that your building does not just sit on its own. It has to be how does it connect and get efficiencies from that wider ecosystem, that systems play that's happening in cities. And particularly if you have investors that own portfolios, and I think you're going to start seeing a connection on those portfolios more to see how you're going to create those efficiencies. So AI is a great tool. It's not the thing. It does drive data center demand, and that's an investment opportunity in itself. But I think from a real estate point of view, it allows you to test it first and see that it works, but also then travel with it and get to deliver the product and business model and efficiencies that you think you can from the very start.
Yeah. And do you think, Emiliano, from a regulatory perspective, anything else needs to shape up in terms of how contracts are signed or how parties engage with each other, to be able to obviously participate in these joint projects or think about the complexities that, for instance, data centers, hosting of information, etc., brings in the real estate space?
I actually see that the legal framework in Saudi has made huge steps forward, and especially in the last year, actually, in easing the integration between international investors and Saudi real estate groups. As many of you know, in the last 6 months, a new law on non-Saudi investments in real estate has been approved. On January 22, it entered into force. So from a prohibition framework, we passed towards a permission framework where all the non-Saudi individuals and also legal entities may purchase properties in Saudi. The individuals who are resident must simply file to process their application through the digital platform Saudi Properties, which is linked to the real estate registry. The individuals non-resident must obtain a digital identity card through their embassies, and then they pass through the digital platform Saudi Properties, linked, as I said, to the real estate registry. And also legal entities may purchase, non-Saudi legal entities may purchase properties in Saudi. I would like to mention not only the legal rules, but also the rationale and the value that stays behind this reform, which was mentioned yesterday by His Excellency Ministry of Urban Planning, which is the law wants to attract not only investment, not only capitals, but also families for a long-term staying investment in Saudi. And that's I think something which is very interesting to mention, because it gives the long-term overview and vision of Saudi.
Yeah, and I think in thinking about that longevity and obviously the life cycle, if I can come back to you, Michael, I know we speak a lot with mega projects on funding readiness, right? So if we were to think about that key checklist, what is an institutional investor going to look at from what they can see, and what should they actually prepare for and ensure they have?
Yeah. So look, the challenge is not every investor is going to come in at every stage of projects, as you know. So it's first of all, it's matching off horses for courses in terms of who comes in. I think when you're looking at the investment readiness, it's being investment ready. It's not, it's got to be validated data. It's got to be a full plan that stacks up and is robust enough to look at sensitivities and movements in the market in terms of income and cost and all of that. So you can say that this is viable, it's profitable, you put in your money, you've got a great likelihood of return. I think all of from a regulatory point of view, from the digital point of view, helps you give that greater comfort to investors coming in. But it's a pack. I mean, the way I sort of from anybody putting forward a project is you've got to think about it as if you're putting in your own dollars or your own money into the project, is what would you expect it to be like in order to take those risks and oftentimes, if you put it in that framework, you realize actually it's not. You're putting something too risky forward. So you've got to reshape it. I think and making it, that affects design. And I think this is where you start. If you start at that digital bit and you're adjusting to get that long-term view, then it helps you shape the business case an awful lot better. I think the other bit is because not everybody comes in at the construction phase. You've got to find investors that will come in, or maybe it's promoters capital that will do that build, and then can you pre-sell? Can you get some certainty that you have an exit post construction? Is a useful structure. Not always utilized, but if you have that sort of the strength and robustness of the business case and the investment case going forward, that helps you, gives you more options when you're talking to institutional investors. I think with the recent, the law that's coming in to bring in international investors, even more important, because firstly they're going to have to get used to the market. Well, they've been here and seen it, but you've got to bring them in and give them some robust investment cases to come in. But the other piece is that when are they going to come in? And so if they're coming in when it's constructed, that's fine. But can you leverage that certainty that they're definitely going to come in? The check is going to be there. There's no uncertainty around that, and that might allow you to get the capital for construction a bit easier in the local market. So there's a number of things, and these models are used everywhere around the world. It's just making sure that you bring it into here when you're thinking about international investors as well.
Yeah, and I think that's where the whole, the law is there. Obviously, projects are there for people to look at. I think it's marrying the two and being able to actually bring them together. And I think on that point, Marco, if we were looking ahead to, that 5-year horizon all the way to 2030, if you had to think about that one execution delivery lever in digital that you told a project, if you want to accelerate, what you're doing here, I recommend this. What would that be?
I think about the next few years and the AI revolution that we're experiencing, and AI is mentioned in every forum that we visit these days. It's become the new infrastructure. We think about electricity, we think about water. AI is really what we think about powering next generation of experience, of operations. And I feel like, we were thinking about the assets that we're going to be responsible for in 2030 and beyond. We've got self-driving cars, we've got robotics. Why not think about the self-performing real estate asset? The assets that can react, respond, interact with the people that they're serving, the businesses that make up the spaces within them. And that core AI infrastructure is going to be very, very important to build into the assets of the future. It comes with proximity to data centers, it comes with the right access to fiber infrastructure, it comes with the right power capacity and knowing where to locate them. And we're seeing already a revolution in how to define the new baseline of design in buildings already starting to emerge, where data centers are now becoming intrinsic to what was previously considered maybe just solely mechanical space. So think about these buildings as being responsible for a 10, 20, 30-year journey where technology is changing so rapidly. And there's so much that's going to be happening in these spaces that will rely on these buildings being able to provide the data at the right point at the right time. They're going to need to be built with that future infrastructure in mind, or at least a modular capability that will allow that future technology to slot in as easy as possible with the minimum impact and retrofit.
Yeah. So I think if we look ahead to 2030, and if I come to you, Emiliano, what is it that you think, in addition to obviously the ownership laws and what we are seeing already, what else do you think is expected to happen in the regulatory space, or would the market would benefit from it coming through in the regulatory space?
I think it's a very difficult question to answer, but because there are so many projects, very interesting projects, which have been developing here. I see many asset class. Yesterday we mentioned health facilities, the creation of hospital, and enlarging the full medical assistance to all the kingdom. We also mentioned yesterday agri-tech, the introduction of new tool equipment with artificial intelligence to improve quality and quantity and agriculture, and to increase national production of food, local production of food, which means the production of food close to the cities. But one new asset class I would mention, which is already growing here is the stadium and sport facilities, which are strongly related to the health of the people. They must be conceived as an holistic experience, a multidisciplinary and multi-purpose facility, not only as a sport venue, but also as a location for hospitality, for a museum, for a pharmacy, for a rehabilitation center, so a place which serves the entire community. And the next events of the World Cup, I think, are very important to complete the 15 projects of stadiums which Saudi is developing, building or renovating, which will be very important for the society.
Yeah, and I think always with hosting mega events, obviously the conversation is about legacy and how those assets are going to be repurposed. So I think with that, Marco, what's your 5-year outlook of the digital landscape, and where do you think that's going to go?
Gee, I wish it was possible to predict 5 years ahead. It seems almost impossible these days. But certainly, I think we're going to be more interconnected. Our experience of our spaces, our assets, our buildings will be less so of an envelope we occupy, but more in a space that enables us to do more. And I think the more that we can think about our buildings as these enabling environments that understand how we work, how we interact, our behavior through these spaces, be it in retail environments, be it in office space, or even just in the metro stations that we occupy, we'll be able to fine-tune these environments over time so that they're always performing at their peak, never reacting, always proactive. At its heart requires a digital and data-centric approach. So I would very much urge everybody in the room to think about the platforms you're implementing in addition to the assets you're building, because that's the lifeblood that's going to keep these assets successful over time and reducing the risk that might come with that future reconfiguration and modernization for a world we cannot properly predict right now.
Yeah, exactly. Without the crystal ball, Michael, what does the investments landscape for Saudi Arabia, given the projects and obviously all of the milestones for the mega events that are due to come, where do you think that's going to go?
Well, I think the platform is there, and so you have the projects, you have investment locally and internationally is now going to come in. You're putting in place all the pieces. I think. We talk about essential infrastructure. I mean, one of the things that is that essential infrastructure that's going to be needed going forward is putting that whole ecosystem together. And it's not actually a physical infrastructure asset. This is about having the public-private, the digital, the AI, the users, building in livability, all of those things, and the strength of that ecosystem, bringing in capital, bringing in the expertise, bringing in construction, doing it on a timely basis, delivering on cost, on time, for all of the things, thinking about legacy, pulling out all that planning, figuring it out from the very start, robust, bringing it to market in all that strength. That whole connectivity of that ecosystem, if you get that right, that is that essential infrastructure to deliver all of the plans, and it will be delivered successfully then.
Yeah. I think if I can close with the 3 key messages from obviously all that we've discussed, I think integration is a key one, not thinking of projects in silos and being able to link it up together. Legacy comes along strongly. Obviously, we're not building for tomorrow, we are building for generations to come, and being prepared for that. And I think how do you bring in obviously that life cycle element of being proactive, as you said, Marco, and not necessarily reactive. With that, I would really like to thank our panelists panelists today. Obviously, thank you for your time, and we now look forward to the very interesting digital showcase session with Marco. Thank you all.
Thank you, everybody. Okay. Do the picture afterwards. Thank you, Ali. So, at Deloitte, we love a good story, and there's nothing better than a story that's backed with data. And that's where we try to excel in the stories we tell, by thinking about real-life data that's informing everyday realities. I'd like to cycle through to there we go. So here today, we're going to discuss the impact of the metro in Riyadh. It's a wonderful story to be truthful, because it's had an immediate impact over the short lifespan of which it's been operational. In 1 year, having serviced, according to the published statistics, around 100 million passenger journeys, with about 25 million journeys that she satisfied within the last quarter, exceeding expectations. It's an incredible story of connectivity, of bringing all the different parts of the city together, and of infrastructure at work. Now, what's interesting when we think about why people are using the metro in such significant volume, 46% of users actually state that they're doing it purely and simply, as you can imagine, to avoid traffic, where around 31% are looking at it from the perspective of cost savings. This is important because we're realizing that the metro is actually satisfying a core need within the population to save costs and save time. But what's also interesting to note is the metro doesn't act as a sole source of outcomes. It's actually supported by an integral, robust network. These feeder systems make the metro work. And they are on the rise significantly in users by those that are maybe within or outside of acceptable distances to the metro, using these buses to bring them to the stations in droves. Now, all of these are really positive statistics because they change the landscape of a city. But what does that mean for real estate? Now, the facts are really interesting here because we've done some analysis on mobility data, on where people are aggregating and living, and also transactional data of land value and transaction through sales in these areas. And we've noted something really interesting. Now, distance really matters here. We've found that within a 500-meter radius of metro stations, over the past 2 years, there's been an increase of 103% in land value. That's significant. When you think about 500 meters to 1 kilometer within a station node, that increase is less, but still quite significant, around 46%. Now, outside of that 1 kilometer radius, the increases, according to the station districts, are quite good, ranging between 12 and 20%. But that top statistic is significant because it's telling us that proximity really matters, and that the station is having a real impact on real estate value. But not just so much as we can see it or we're close, but the fact that we can walk to the station in 5 minutes. That's the criteria that's really driving those volumes higher. Proximity to transit is a key indicator of future real estate strategy in Riyadh, and the facts are in. Now, what's interesting to note is that when we think about a 15-minute city, we're really thinking about the time it takes to get from where I am to what I need to make my life better. It's about travel distance, it's about proximity, and it's about accessibility. But currently, only around 18% of Riyadh residents live within a 15-minute proximity of everything that they would need in their day-to-day lives. So that's really telling as well, because the metro is doing a lot to connect the population, but there's still a significant opportunity to develop in areas where those populations that are in the periphery need to be provided with the services and the amenities they require to be within that 15-minute reality. So when we think about the data in a more detailed way, we're noting that while Riyadh has aspirations to become a 15-minute city in its future, and is certainly on a trajectory to get there, it currently is a 45-minute city when you look at the overall distribution of the population. And that's because it's still very road-centric. And also, many of the amenities that the population enjoy today are very much clustered within central locations, meaning that the vast majority have to travel long distances to get what they need. It could be medical care, it could be access to entertainment. And that creates a scenario where not only is it an opportunity for the metro to do more, and hopefully those 100 million passenger rides increase to 200 million by this time next year, but also there's an opportunity to think about those populations within those peripherals as being an attractive market to build for, to cater for, to start to create nodes of 15-minute centricity around the periphery to satisfy the population that's hungry for amenity and hungry for recreation and hungry for services. Central Riyadh has the highest facility concentration, as you would imagine, with offices and malls, while the peripheral areas show limited coverage. And what we're noticing as well is that there are very many potential zones for redevelopment that remain undiscovered and ripe for investigation at this stage. Now, when we look at overall population density, this is a map that's showing us where people are actually living. And 1 year ago, you'll note there's a high degree of high density, dark red area in the central Riyadh location with a few pockets of red zones around the periphery. And in blue, you can see the dots representing the metro line and its relationship to those population densities. 1 year later, just 1 year later, the red dots are starting to cluster around those blue areas on the right-hand side more than ever. This is showing us that people want to live close to connection. Accessibility is key. That is driving demand. It's not about proximity to the center, but about ability to get to the center through access to infrastructure. Now, these red zones are really, really telling because there's more that can be done. And the more that those red zones start to appear on the right-hand side, the more that 15-minute city becomes a reality. Now, when we think about the metro as in terms of popularity, there are about 80 or so stations that can be addressed and studied. We're seeing, of course, there's a significant rise in the number of these over the past year and continuing on a trend of popularity. Now, of course, and I think some of the darker red bars are a little bit difficult to see on the black, but the main central Riyadh stations are, of course, booming in terms of their popularity. This is where people are aggregating towards on a daily basis. This is where the vast majority are concentrating and loading their attention. But you can notice that from the university up in the north to Hassan Biltabas Street and Nasim, all of these are spiking in popularity as residential populations start to grow in these areas as well. And that's why it becomes more and more important to think about what we can do to supplement those populations with better accessibility, more residential development, to make sure that those nodes begin and continue their spike in popularity, making the metro work in an efficient way, allowing the bus feeder routes to do their job, and making sure that this idea around accessibility becomes the new metric around which future development planning and strategy is based. So in closing, our findings around the 15, 30, and 45-minute city reality is, while it's 45 minutes today, there are clusters of 15-minute city realities emerging around Riyadh and its periphery. Think about Riyadh and its future as a hub-and-spoke model, where the majority of activity happens around the center, and pockets of urban activity start to emerge around the outside, connected by the feeder routes of the metro and its bus systems. This will make Riyadh an attractive, more attractive destination and city in activity, and ensure that it is satisfying the main requirements of its citizens who are speaking louder than ever. That's what's important to them, more than a destination, more than a great location. Is the metric that matters to them is time. It's time and accessibility. What can I do to save that time that I can give to the work I have to do on a daily basis, or the time I have with my families? How can I reduce the friction between where I live, where I work, and then base my decisions around where I live accordingly? And that puts us in a situation where even that last mile in the searing heat of the summer becomes something that many are willing to proactively push through by virtue of having that 5-minute proximity to the station districts and locations. That metro premium is real, and I would recommend that all of you take a significant look at how you can leverage the power of the metro in your future real estate planning as an indicator and an informer of your future real estate potential in driving not only demand, satisfying and meeting that demand, but also manifesting returns on your investments that keep with those significant uplifts that we've noticed through our analysis, making for a resilient and connected future in Riyadh. And what I would also note is, 1 year in with the Riyadh station, it's already outperforming the likes of metro stations such as Dubai, noting a superior coverage of around 19% compared to 13%. So the foundation is really set to do incredible things going forward. It's been a fantastic year, and I think the next 2, 3, 5 years are going to be astronomical in terms of what it means for the city, as well as going to mean to the property values in the vicinities around those stations. Thank you very much.
There we go. Let's get live. Thank you, everybody. And I think the most important part is actually now I'm going to ask you to pull your phones out. And thank you for your attention during the 3 sessions. And also thanks to our panelists. And I think a whistle-stop tour of our insights. As I said, a publication is going to be coming out in February. If you would like to contribute, we are looking for your opinion as well in terms of where is the market sitting. So please scan the QR code when it reappears in a second. We'll ask the organisers to leave it up there for a minute or two. You'll also be able to register to get a full copy of the publication. There'll be a review of 2025, the outlook in terms of 2026 by each of the real estate asset classes that we've touched on today, including industrial and logistics as well, which we'll go into more detail. And there are thought pieces from leaders within our business, including the thought piece on the Riyadh Metro, amongst others. So I would welcome your participation, because I will also include all of the survey results and help get the message out in terms of what an exciting market that we are in globally, and looking forward to what happens during 2026. Thank you, everybody.